Welcome to Redwood Forex's chart art section. This is an example of the accompanying videos that go along with the free charts. So here we're looking at a chart of the British pound, US dollar, and we were talking about this bearish outside bar that was located right here. So what makes this a good trade? First off, we have a bearish outside bar, and it's not the greatest bearish outside bar. It didn't finish quite strong. But what made it a good bearish outside bar was its location. For instance, here's a bearish outside bar right here that failed. It didn't go down afterwards. Why did this fail? It wasn't able to finish below the 50% retracement, which means that there weren't enough sellers around this area. At least this is what price is trying to tell us here. So it came back up, and here's the bar that we have in question. So bearish outside bar. Not the best, but great location. What makes it a great location? It finished on the 61.8 fib area, and the pass, you can see where price was able to flip back and forth around. It's also the 1.61 big round number, psychological number. Humans like big round numbers. It just sounds good to our ears. So when you have a big round number lining up with the fib level, it's usually an area that you want to keep in mind. So with that in mind, we look to the left, which is the history. Remember, we don't have all this junk yet. We didn't know about this. We're looking at this in hindsight. But we look to the left, and you can see where price previously acted as support, broke on through, acted as resistance, broke through, got a little messy here, but it finally broke back away. When it came back, acted as resistance again. When it came back to it again, you can see it kind of stalled out, retraced a little bit, and then finally broke right on through. Trickled down, and now here we're back at this level again, at 61.8. So let's go to a live chart. Same stuff here. Here's the bar that we're talking about in question. It's actually gone further than previously. It's gone almost 700 pips, which would have been a great move when risking only 70 to 80 pips. So I talked about 3 different entries that you could have taken off this bar. And the first one I would have taken was right here. You could have taken the bar off the next day when it retraced back to this 1.61, 61.8 fib retracement level. Why did it hold? Well, this bearish outside bar went above, price went above it, the 61.8, and was able to finish down below the 61.8. The actual close was down below 61.8, which indicated that there were enough sellers that when it came back to this area, it was going to hold. So what you would have done is you could have made a sell, put in a sell order right here, put an 80 pip stop, and what I would have done is I would have let the trade go until it actually hit the bottom of this bearish outside bar that we were looking at. And once it hit that, I would have put my stop at break even and made it a free trade, or taken some profit off the table. It was for over 125 pips, which is a good ratio when you're talking about only an 80 pip stop. Second entry that you could have taken was actually the break of the bearish outside bar. Now I wouldn't have taken this entry, because then you would have had almost a 200 pip stop, and that's just not worth it. Especially when we're trying to practice good risk management, you don't want to risk more than 1 to 2% of your account on any trade. So if you have a 200 pip stop, your lot size isn't going to be as big as if you had only an 80 pip stop. So you're cutting into your profit a little more. It's just not worth it. And the other thing is the 50% retracement level is right here, and it actually held. And you can see also, if you put a line here, it kind of lines up well with this area here and these lows over here. So there was a good indication that there probably weren't going to be enough sellers to step in here. So price makes it back, and this is actually probably where I would have entered, is this third entry right here, when it came back to the 61.8 level. There was just a good indication that it was probably going to hold. Like I said, you have a 1.61 psychological number, and you have a 61.8 fib retracement with price flips previously in the past. And if you had taken there, I mean, for an 80 pip stop, if you were able to continue and stay in this trade and hold, moving your stop along the way as you hit different targets, then it would have been a great trade. Another thing that was good about this trade is it actually had divergence. So if you draw a line from here to here and then look at it on the RSI, which shows momentum, you can see on the chart it's going down, on the RSI it's going up. So it's showing that momentum is slowing down here. So we have 4 different things showing confluence about this trade. We have the 61.8 fib retracement, the 1.61 big round number. Price has flipped around this price previously in the past, and we also have divergence. So I hope you enjoyed this video. Have a good day.